Question 1. Eligibility for disability insurance benefits. Which of the following is not a typical requirement for eligibility for disability insurance benefits under Minnesota law? A. The claimant must have a pre-existing condition that exacerbates over time. B. The claimant must be unable to perform at least one essential function of their occupation. C. The claimant must be able to demonstrate a history of consistent income or work. D. The claimant must meet the minimum waiting period defined in the policy. Answer: B. The claimant must be unable to perform at least one essential function of their occupation. Explanation: under Minnesota disability insurance regulations, the claimant must be unable to perform the duties of their occupation, but this is based on the definition of total disability in the insurance policy. The requirement is typically that the individual cannot engage in any occupation for which they are reasonably qualified by education, training, or experience, not just one essential function. Pre-existing conditions, income history, and waiting periods are common eligibility requirements. Question 2. Scenario-based question on claim filing. Sarah has been diagnosed with a neurological disorder that has caused her to lose motor functions, making it difficult for her to perform her job as a graphic designer. She has submitted her medical documentation and completed her claim forms. However, her insurance company has requested a functional capacity evaluation, FCE, and a vocational assessment. What should Sarah do next in this situation? A. Wait for the insurance company to process the claim without further action, as she has already provided all required documents. B. Complain to the insurance company that the additional assessments are unnecessary, as she has provided sufficient evidence. C. Cooperate with the insurance company's request for an FCE and vocational assessment to support her claim and ensure timely processing. D. Seek legal advice before proceeding with the additional assessments, as she believes they might delay her benefits. Answer: C. Cooperate with the insurance company's request for an FCE and vocational assessment to support her claim and ensure timely processing. Explanation: in the claims process, insurance companies often request additional evaluations such as functional capacity evaluations, FCE, and vocational assessments to verify the extent of disability and to assess whether the claimant can perform any work. It is crucial for Sarah to comply with these requests in order to move the claim forward and ensure that she meets the necessary documentation requirements. Refusing or delaying these evaluations could result in a denial or delay in her benefits. Question 3. Calculation of disability benefits. An individual's pre-disability monthly income is $5,000. The policy provides a benefit percentage of 60% with a maximum monthly benefit limit of $3,000. If the claimant also receives $1,000 per month in Social Security Disability Insurance (SSDI), what is the total monthly benefit payable under the disability policy, assuming no other offsets? A. $3,000. B. $2,000. C. $1,500. D. $2,500. Answer: B. $2,000. Explanation: the disability insurance policy pays 60% of the pre-disability income, which amounts to 60% of $5,000 or equals $3,000. However, since the policy has a maximum monthly benefit limit of $3,000, the maximum allowable benefit is $3,000. Additionally, there is a Social Security Disability Insurance (SSDI) offset of $1,000. Therefore, the total monthly benefit paid will be $3,000. $1,000 equals $2,000. This reduction is due to the coordination of benefits between the disability insurance policy and SSDI. Question 4. Total versus partial disability. Which of the following statements accurately describes the difference between total disability and partial disability in Minnesota disability insurance policies? A. Total disability allows for full benefits, while partial disability results in reduced benefits based on a specific percentage of income loss. B. Total disability benefits are only available to individuals who cannot perform any occupation, while partial disability applies to those who can perform some job functions. C. Partial disability provides benefits only for individuals who have been disabled for a duration of 12 months or more, while total disability benefits are immediate. D. Total disability applies only to medical conditions, while partial disability applies to emotional or psychological disorders. Answer A. Total disability allows for full benefits, while partial disability results in reduced benefits based on a specific percentage of income loss. Explanation: Under Minnesota disability insurance policies, total disability refers to a situation where the insured is completely unable to perform any substantial gainful work due to their medical condition. Partial disability, on the other hand, refers to a situation where the insured can still perform some job functions, but their income is reduced due to the limitations caused by the disability. Partial disability benefits are typically calculated based on a percentage of the income lost. Question 5. Workers' compensation versus disability insurance. Which of the following is a key difference between workers' compensation and disability insurance in Minnesota? A. Workers' compensation is available only for job-related injuries, while disability insurance can cover both job-related and non-job-related conditions. B. Workers' compensation provides a higher benefit than disability insurance as it covers all medical expenses without any limitations. C. Disability insurance covers medical costs while workers' compensation does not provide medical coverage for injuries. D. Workers' compensation is a voluntary program, while disability insurance is mandatory for all employees in Minnesota. Answer A. Workers' compensation is available only for job-related injuries, while disability insurance can cover both job-related and non-job-related conditions. Explanation. The key distinction between workers' compensation and disability insurance is that workers' compensation covers injuries or illnesses that occur as a result of job-related activities, while disability insurance can provide coverage for both job-related and non-job-related disabilities. Workers' compensation is a mandatory insurance for employers in Minnesota, while disability insurance is typically voluntary or offered through an employer-provided group policy. Workers' compensation benefits are typically more limited and subject to specific state regulations. Question 6. Scenario-based question on exclusions. James is a construction worker who sustains a back injury while lifting heavy materials on the job. However, his disability insurance policy contains an exclusion for injuries resulting from high-risk activities. But James believes that his injury may fall under the exclusion and is unsure whether he will be able to collect benefits. What should James do in this situation? A. Assume his claim will be denied and not pursue the disability benefits further. B. File the claim and provide all medical documentation, allowing the insurer to review the case and determine if the exclusion applies. C. Seek a lawyer to review his policy before filing the claim, as exclusions may lead to a denial of his benefits. D. Contact the Minnesota Department of Insurance to discuss whether the exclusion clause is enforceable. Answer. B. File the claim and provide all medical documentation, allowing the insurer to review the case and determine if the exclusion applies. Explanation. James should file the claim and provide all necessary medical documentation, as the insurance company is responsible for reviewing the claim and applying any relevant exclusions based on the policy's terms. Exclusions related to high-risk activities may limit or deny coverage, but the insurer must make the final determination after reviewing the claim. It is important not to assume the outcome before filing and to allow the claims process to run its course. Question 7. Benefit coordination with other insurance. If an individual is receiving both disability benefits from their private insurance policy and Social Security Disability Insurance (SSDI), which of the following is most likely to occur regarding their disability benefits? A. The private disability insurance benefits will be increased to offset the SSDI amount, ensuring the claimant receives the same total income. B. The private disability insurance benefits will be reduced to account for the SSDI benefits in order to avoid overpayment of disability income. C. The claimant can choose whether to apply for SSDI, but if they do, their private disability insurance will not be affected. D. SSDI benefits will automatically be discontinued once private disability insurance benefits begin. Answer. B. The private disability insurance benefits will be reduced to account for the SSDI benefits in order to avoid overpayment of disability income. Explanation. When a claimant is receiving both private disability benefits and Social Security Disability Insurance (SSDI), the private insurer typically coordinates benefits to prevent overpayment. This often means reducing the private disability insurance benefits by the amount the individual receives from SSDI. Coordination of benefits clauses are common in disability insurance policies to avoid a situation where the claimant receives more in benefits than they would have earned while working. Question 8. Cost of living adjustments, COLA rider. Which of the following statements about the cost of living adjustment, COLA rider, in a Minnesota disability insurance policy is true? A. The COLA rider increases benefits by a fixed percentage annually regardless of inflation rates. B. The COLA rider adjusts benefits based on changes in the Consumer Price Index (CPI) to keep pace with inflation. C. The COLA rider is only available in long-term disability policies, not short-term policies. D. The COLA rider is automatically included in every disability insurance policy unless specifically excluded by the policyholder. Answer: B. The COLA rider adjusts benefits based on changes in the Consumer Price Index (CPI) to keep pace with inflation. Explanation: the cost of living adjustment (COLA) rider allows disability benefits to increase periodically to keep up with inflation, usually based on changes in the Consumer Price Index (CPI). This ensures that the claimant's benefits retain their purchasing power over time. This rider is not automatically included in every policy and is an optional add-on that can be included for an additional premium. Question 9. Documentation and medical evaluations. Which of the following is typically required to support a disability insurance claim under Minnesota law? A. A statement from the claimant's employer stating that they can no longer perform job duties. B. A medical evaluation confirming the claimant's diagnosis and how it affects their ability to work. C. A detailed list of the claimant's work history, including past jobs and earnings. D. Proof of tax filings for the past 10 years. Answer: B. A medical evaluation confirming the claimant's diagnosis and how it affects their ability to work. Explanation: to support a disability insurance claim, the claimant must typically submit a medical evaluation confirming their diagnosis and how it impairs their ability to perform work-related tasks. The insurance company requires this documentation to assess the severity of the disability and determine eligibility for benefits. Employer statements and tax filings may be relevant for proving work history or income, but they are not as central as the medical evaluation for determining eligibility for benefits. Question 10. Ethical responsibilities of disability insurance agents. Which of the following actions would be a violation of ethical standards for disability insurance agents in Minnesota? A. Providing clients with a clear explanation of all policy terms, including any exclusions or limitations. B. Misrepresenting the scope of coverage in order to make a sale or to retain clients. C. Assisting clients with the claims filing process and ensuring they have all necessary documentation. D. Maintaining confidentiality regarding clients' personal and medical information during the claims process. Answer: B. Misrepresenting the scope of coverage in order to make a sale or to retain clients. Explanation: disability insurance agents have an ethical responsibility to act in the best interest of their clients. Misrepresenting the scope of coverage, including hiding exclusions or overstating benefits to make a sale, is a clear violation of ethical standards. Agents are required to provide accurate and honest information regarding policies, assist clients with the claims process, and maintain confidentiality throughout the process. Question 11. Disability insurance products and providers. Which of the following is a characteristic of employer-sponsored group disability insurance compared to individual disability insurance in Minnesota? A. Group disability insurance typically offers higher monthly benefit amounts due to collective bargaining. B. Group disability insurance is more flexible in terms of coverage options and policy customization. C. Premiums for group disability insurance are generally lower than for individual policies due to shared risk. D. Group disability insurance does not require evidence of insurability for coverage. Answer: C. Premiums for group disability insurance are generally lower than for individual policies due to shared risk. Explanation: Group disability insurance is typically less expensive than individual policies because the risk is spread across a larger group of policyholders, reducing the overall cost per person. These policies may not offer the same level of customization as individual policies, but they are more affordable due to the group purchasing power. Additionally, group policies often do not require individual health assessments or evidence of insurability for employees covered by the plan. Question 12. Definition of disability. Which of the following definitions of disability is commonly used in Minnesota disability insurance policies? A. Disability is defined as the inability to perform any job in the entire labor market. B. Disability is defined as the inability to perform the essential duties of one's occupation. C. Disability is only recognized if the insured is permanently unable to work. D. Disability is defined as a medical condition that results in hospitalization for at least 30 days. Answer B. Disability is defined as the inability to perform the essential duties of one's occupation. Explanation: in many Minnesota disability insurance policies, disability is defined as the inability to perform the essential duties of the insured's own occupation for a specified period. This typically applies to own occupation disability policies, which are common in both short and long-term disability insurance. It does not necessarily require the inability to perform any job across the labor market. Question 13. Elimination period. Which of the following best describes the purpose of the elimination period in a disability insurance policy? A. It determines how much the benefit amount will be paid. B. It is the waiting period before benefits begin after the disability occurs. C. It is the period during which the insurance company investigates the claim. D. It determines the duration for which benefits will be paid. Answer B. It is the waiting period before benefits begin after the disability occurs. Explanation: the elimination period is the waiting period between the onset of disability and when benefits begin to be paid. This period often ranges from a few days to several months. It acts as a deductible for the policyholder, meaning that the insured must be disabled for this duration before they can start receiving benefits. Question 14. Social Security Disability Insurance (SDI) integration. How does integration of Social Security Disability Insurance (SDI) with private disability insurance benefits typically work? A. SSDI benefits are subtracted from private disability benefits on a dollar-for-dollar basis. B. Private disability benefits are increased to match the amount of SSDI benefits. C. The SSDI benefits are considered taxable while private benefits are not. D. Private insurance benefits remain unchanged regardless of SSDI eligibility. Answer A. SSDI benefits are subtracted from private disability benefits on a dollar-for-dollar basis. Explanation: when an individual is receiving both SSDI and private disability insurance benefits, the private insurer typically reduces the benefits by the amount of SSDI benefits the individual is receiving. This ensures that the total disability benefits do not exceed a certain percentage of the insured's pre-disability income, preventing overpayment. Question 15. Pre-existing conditions cause. Which of the following is true about the pre-existing conditions cause in Minnesota disability insurance policies? A. The cause prevents coverage of any condition that was diagnosed within the first 30 days of the policy. B. The cause only applies if the condition worsens after the policy is issued. C. The cause excludes coverage for medical conditions that existed within a specific period before the policy's start date. D. Pre-existing conditions are automatically covered after the first year of the policy. Answer C. The cause excludes coverage for medical conditions that existed within a specific period before the policy's start date. Explanation: a pre-existing conditions cause typically excludes coverage for conditions that were diagnosed or treated within a specific period before the policy's effective date, often 3 to 6 months. The cause is designed to prevent insurers from covering conditions that already exist at the time the policy is purchased. Question 16. Recurrent disability cause. Under the recurrent disability provision, when an insured individual returns to work after being disabled, which of the following best describes the treatment of their new disability? The new disability is treated as a continuation of the original claim, and the elimination period does not apply. B. The new disability is treated as a completely new claim, and the elimination period must be satisfied again. C. The insured will receive reduced benefits due to the recurrence of the condition. D. The new disability is always treated as a new claim, regardless of whether it is related to the original injury. Answer A. The new disability is treated as a continuation of the original claim, and the elimination period does not apply. Explanation: a recurrent disability cause allows the insured individual to continue receiving benefits for a new period of disability without the need to satisfy the elimination period again, as long as the new disability is a continuation of the previous condition. This provision helps ensure continuity in coverage and reduces financial hardship in cases of recurring disabilities. Question 17. Partial disability benefits. Which of the following best describes how partial disability benefits are calculated in Minnesota disability insurance policies? A. Partial disability benefits are a percentage of the policyholder's pre-disability income based on the percentage of time they are unable to work. B. Partial disability benefits are calculated based on the percentage of income the policyholder has lost, regardless of their ability to work. C. Partial disability benefits are fixed at A set amount, regardless of the policyholder's earnings prior to the disability. D. Partial disability benefits are only available if the policyholder can no longer perform any duties of their occupation. Answer A. Partial disability benefits are a percentage of the policyholder's pre-disability income based on the percentage of time they are unable to work. Explanation. Partial disability benefits are typically calculated as a percentage of the policyholder's pre-disability income based on the proportion of time or tasks they are unable to perform due to their disability. The more an individual is unable to work, the higher the percentage of their pre-disability income they can receive. Question 18. Long-term disability-led coverage. Which of the following is a common feature of long-term disability-led insurance policies in Minnesota? A. LTD coverage typically kicks in after a short waiting period and provides benefits for as long as the individual remains disabled. B. LTD coverage is usually limited to a period of 12 months. C. LTD insurance benefits are tax-free for the insured if the employer pays the premiums. D. LTD policies require individuals to file a claim within 30 days of disability onset to qualify for benefits. Answer A. LTD coverage typically kicks in after a short waiting period and provides benefits for as long as the individual remains disabled. Explanation. Long-term disability coverage provides benefits after a specified elimination period, often 90 days or more, and can continue for an extended period, sometimes until the individual reaches retirement age. Unlike short-term disability policies, LTD provides ongoing benefits for long-term conditions. If an employer pays the premiums, benefits may be taxable to the insured. Question 19. Maximum benefit period. Which of the following best describes the maximum benefit period of each disability insurance policy? A. The maximum benefit period determines how long the insurance company will pay benefits for any disability, regardless of severity. B. The maximum benefit period refers to the maximum amount an insured person can receive each month. C. The maximum benefit period applies only to short-term disability policies and is typically limited to 12 months. D. The maximum benefit period is the length of time benefits are payable, which may vary depending on the severity of the disability and the policy. Answer D. The maximum benefit period is the length of time benefits are payable, which may vary depending on the severity of the disability and the policy. Explanation. The maximum benefit period refers to the length of time that disability insurance benefits will be paid. This period varies depending on the policy and may be 2 years, 5 years, or even until the individual reaches retirement age. The benefit period typically depends on the severity of the disability and whether the policyholder has purchased additional riders or coverage. Question 20. Policy renewability. Which of the following is a feature of a guaranteed renewable disability insurance policy? A. The insurer can cancel the policy at any time, regardless of the policyholder's health. B. The insurer cannot cancel the policy but can increase premiums for all policyholders in a particular group. C. The insurer can only increase premiums for the individual if they develop a disability. D. The policyholder must provide medical evidence each year to continue coverage. Answer B. The insurer cannot cancel the policy but can increase premiums for all policyholders in a particular group. Explanation. A guaranteed renewable disability insurance policy ensures that the insurer cannot cancel the policy as long as the premiums are paid. However, the insurer can increase premiums for all policyholders in a particular group if they choose to do so, typically based on factors like age or increased claims experience. Individual premiums cannot be increased based solely on a policyholder's health or disability status. Question 21. Own occupation versus any occupation. Which of the following best describes the difference between an own occupation and any occupation disability policies in Minnesota? A. Own occupation policies provide benefits if the insured is unable to perform their current job, while any occupation policies provide benefits only if the insured cannot perform any job. B. Any occupation policies provide broader coverage than own occupation policies, as they cover any job regardless of skills. C. Own occupation policies only apply to high-income professions, while any occupation applies to all job types. D. Many occupation policies provide coverage for mental disabilities, while own occupation policies do not. Answer A. Known occupation policies provide benefits if the insured is unable to perform their current job, while any occupation policies provide benefits only if the insured cannot perform any job. Explanation. The key difference between own occupation and any occupation policies lies in the definition of disability. An own occupation policy provides benefits if the insured is unable to perform their specific job duties. In any occupation policy, on the other hand, only provides benefits if the insured is unable to perform any job for which they are reasonably qualified based on their skills, training, and experience. Question 22. Workers' compensation and disability insurance. How does workers' compensation interact with disability insurance in Minnesota? A. Workers' compensation benefits are deducted from disability insurance benefits on a dollar-for-dollar basis. B. Workers' compensation benefits do not affect disability insurance benefits. C. Workers' compensation pays benefits only if the injury occurs outside of work hours. D. Disability insurance is always paid first, and workers' compensation supplements the benefits. Answer A. Workers' compensation benefits are deducted from disability insurance benefits on a dollar-for-dollar basis. Explanation. In Minnesota, workers' compensation benefits and private disability insurance often interact such that workers' compensation benefits are deducted from disability benefits on a dollar-for-dollar basis. This is to prevent the individual from receiving more than 100% of their pre-disability income. Question 23. Partial disability benefit duration. How long will partial disability benefits typically be paid under a Minnesota disability insurance policy? A. Until the individual can return to full-time work. B. For a specified duration, often up to 6 months or 12 months, depending on the policy. C. Until the insured reaches retirement age. D. For an indefinite period as long as the disability is partial. Answer B. For a specified duration, often up to 6 months or 12 months, depending on the policy. Explanation. Partial disability benefits are usually paid for a specified duration, which typically ranges from 6 months to 12 months, depending on the policy. These benefits are designed to assist individuals who are partially unable to work but still able to perform some of their job duties. Question 24. Survivor benefits in disability policies. Which of the following is typically true regarding survivor benefits in a disability insurance policy? A. Survivor benefits are available only if the insured dies while receiving disability benefits. B. Survivor benefits are paid to the insured's family regardless of whether the insured was disabled. C. Survivor benefits are always included in every disability policy. D. Survivor benefits are available only if the insured's disability is permanent and total. Answer A. Survivor benefits are available only if the insured dies while receiving disability benefits. Explanation. Survivor benefits are generally available in some disability insurance policies if the insured dies while receiving disability benefits. These benefits are paid to the insured's beneficiaries to help cover their loss of income, typically until the period of disability benefits would have ended. Question 25. Mental health coverage in disability insurance. In Minnesota disability insurance policies, which of the following is commonly true about mental health coverage? A. Mental health disabilities are always covered under disability policies. B. Mental health disabilities are covered, but often with a limited benefit period or reduced benefit amount. C. Mental health conditions are never covered under disability insurance policies. D. Mental health benefits are only available if the insured is hospitalized for at least 14 days. Answer B. Mental health disabilities are covered, but often with a limited benefit period or reduced benefit amount. Explanation. Many Minnesota disability insurance policies cover mental health conditions, but these benefits often have limitations, such as reduced benefit amounts or shorter benefit periods. This is due to the challenges associated with mental health diagnosis and treatment, which may not always be as easy to assess as physical disabilities. Question 26. Own occupation versus any occupation benefit periods. Which of the following is a key difference between own occupation and any occupation disability policies in terms of benefit periods? A. Own occupation policies typically have shorter benefit periods than any occupation policies. B. In any occupation policies have benefit periods that may be extended based on the severity of the disability. C. Own occupation policies may provide benefits for a longer period compared to any occupation policies. D. Any occupation policies have indefinite benefit periods, whereas own occupation policies have fixed periods. Answer C. Own occupation policies may provide benefits for a longer period compared to many occupation policies. Explanation. Own occupation policies generally offer a longer benefit period because they focus on the individual's ability to perform their specific job. If the insured cannot work in their occupation, they are eligible for benefits are often for a longer time frame. On the other hand, any occupation policies may limit benefits to a shorter duration since benefits are only provided if the insured cannot perform any job. Question 27. Benefit calculation for short-term disability. How are benefits typically calculated for short-term disability insurance in Minnesota? A. Benefits are calculated based on the policyholder's pre-disability income, usually covering 100% of that income. B. Benefits are calculated based on a flat amount, regardless of the insured's pre-disability income. C. Benefits are based on the number of days the insured has been disabled. D. Benefits are generally 60% to 70% of the insured's pre-disability income. Answer D. Benefits are generally 60% to 70% of the insured's pre-disability income. Explanation: short-term disability insurance in Minnesota typically pays a percentage, usually 60% to 70% of the insured's pre-disability income, rather than covering 100%. This percentage reflects the insurer's attempt to balance providing adequate income replacement while managing risk. Question 28. Disability insurance for self-employed individuals. How does disability insurance typically differ for self-employed individuals in Minnesota? A. Self-employed individuals can only purchase long-term disability insurance, with no options for short-term coverage. B. Self-employed individuals may need to purchase both individual and group policies for comprehensive coverage. C. Self-employed individuals are usually ineligible for disability insurance coverage. D. Self-employed individuals may face higher premiums for disability coverage compared to employees of large companies. Answer D. Self-employed individuals may face higher premiums for disability coverage compared to employees of large companies. Explanation: self-employed individuals typically face higher premiums for disability insurance because they do not have access to employer-sponsored group policies, which tend to be more affordable. Additionally, self-employed individuals may need to buy individual policies, which are more expensive. Question 29. Disability insurance and pre-existing conditions. What is the most common way pre-existing conditions are treated in Minnesota disability insurance policies? A. Pre-existing conditions are always excluded from coverage under all disability policies. B. Pre-existing conditions are covered after a waiting period, typically 12 months. C. Pre-existing conditions are covered if they are disclosed at the time of application. D. Pre-existing conditions are automatically covered after the insured has been continuously employed for 3 months. Answer B. Pre-existing conditions are covered after a waiting period, typically 12 months. The explanation: in Minnesota, disability insurance policies often include a waiting period for pre-existing conditions, typically around 12 months. This means that if an individual has a medical condition that existed before purchasing the policy, it will not be covered during this waiting period. Question 30. Rehabilitation benefits in disability policies. Which of the following is typically true about rehabilitation benefits under Minnesota disability insurance policies? A. Rehabilitation benefits are offered to help the insured return to work and are provided as part of the policy. B. Rehabilitation benefits are only available if the insured is permanently disabled. C. Rehabilitation benefits can be used only to cover medical expenses related to disability. D. Rehabilitation benefits are generally not covered under disability insurance policies. Answer A. Rehabilitation benefits are offered to help the insured return to work and are provided as part of the policy. Explanation: rehabilitation benefits are designed to help an insured individual return to work by providing coverage for rehabilitation services such as vocational training or physical therapy. These benefits are typically included in disability policies to support recovery and help the insured resume their normal work duties.